in Baku. Only a change in the military balance and our ability to defend ourselves will change their calculations. Let's move on to our second topic, which is a press conference that was held by UATE last week. UATE is actually the trade organization, it's the United of Advanced Technology Enterprises in Armenia that represents the IT industry. And they held a press conference demanding for the government and the central bank to act to stop the further appreciation of the drum, since that is hurting their industry, according to them, killing their industry. Now, like all trade groups, frankly, they all tend to exaggerate to get what they want, but this actually is a real issue. The central bank needs to intervene far more aggressively and far more openly, and say so that they're going to act to prevent further appreciation. Right now, the drum is around 395, which means it's appreciated against the euro and the dollar by more than 20%, which is, if we go any further than that, I think we're going to have some serious economic repercussions. The only thing that, there's many positive aspects to this, obviously, that we don't see as far as having lower inflation than other countries. But one of the things that's happened is that there's a debt per GDP, which is, how much is the size of your national debt to the size of your economy, has actually declined from 60% to 50%, which is actually something that is very healthy and good for our economic prospects in the long term. Now we're going to move on to our last topic of the week, which is a very interesting comments that were made by the Aliyev's oil minister, which has been little noted around the world, but actually they're quite relevant and important. And what he said is that in order to actually bring to life the expanded gas export possibility from Aliyev's country to the EU, they're going to need $40 billion in investments. Now, this announcement itself is actually it's starting to be the proof of what many have been saying, which is this notion that Aliyev's country is any kind of an alternative to Russian gas is a myth, because the gas resources are not there. Let's look at what Aliyev's oil minister is demanding. He wants $40 billion investments on a maximum basis to be able to provide 6% of EU energy needs on the natural gas front. If you look at the breakdown of this 40 billion, which is the key part, about 10 or 12 billion dollars of it would be to expand current pipelines or build much bigger ones. The other 28, 30 billion dollars would actually have to go towards looking for new natural gas resources that frankly have not been found. And this is not, finding natural gas is not something that happens on a daily basis. So they're asking for massive and speculative investments from private sector sources to look for gas that isn't there. As we know, the private sector is not apt to spend that kind of money on something that is not solid. And the other problem with what he's proposing is, even if any of this comes to pass, you're looking at 6 or 7 years before they can even be able to export any of this, even if this gas is found, which they're not likely to have found it, because the way these things work is most of these areas have been explored greatly, and they would have already found it if it wasn't for the fact that it is not there. If you look at the math on this, the math simply doesn't work unless this is really a big scheme to launder Russian gas into Europe. And there's actually precedence for this, because right now as we speak, Russian oil is being exported to Europe via China and India, who buy from Russia on discount, and then they resell it. And everyone is okay with this hypocrisy, because if they know if you take Russian oil off the market, we know the prices will be dramatically higher and the world economy will be far more damaged than it already has been by the Ukraine war. Now let's contrast this fraudulent deal with the deal that was announced a couple of months ago between the Germany, EU, and the Qatari government. And there's a new LNG project, and LNG stands for liquefied natural gas, which will provide somewhere between 30 to 35% of European gas use by about 2027. This is a $70 billion project. And if we're just doing the basic math, what Aliyev's oil minister is asking for $40 billion in speculative investments, of which the money they do not have and have not sourced, to get to 6%. And what the Qataris are offering is 35% of European use for a $70 billion for investment. In conclusion, what does all of this prove? It proves what many of us have been saying, and many people that are actually experts in the industry, that this entire Aliyev gas project with Europe is actually political. It's really not about energy security because the energy simply isn't there. And this statement by the oil minister about the amount of investments and money that they need to make it work is actually their first admission that this isn't going to happen, or them admitting that they can't actually come through with the promises that you made. And this makes that infamous press conference in Baku between von der Leyen and that Moloch from Baku even more ridiculous. It was essentially a gigantic dog and pony show done for political purposes, because the EU wanted to tell its constituencies it's actually looking for alternatives for Russian gas, even though this is fictional. And Aliyev wanted essentially approval for his further aggressions, and they both got what they wanted, and we're the people who paid the price for it. In conclusion, the reality of it is when it comes to energy markets universally, Aliyev is a marginal player. And cannot really be any kind of an alternative for Russian gas. And as their oil production declines by the year 2030, they're pretty much out of the oil business. They're going to become even more marginal players. Thank you for joining me in this week's episode of Insights.
You don't understand. I could have had class. I could have been a contender. I could have been somebody instead of a bum. Which is what I am. Let's face it.